Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of Brent crude oil and spot gold.
ICE Brent crude oil futures. On the face of it, a lower but still indecisive spinning top pattern yesterday. It was also day 2 in a 2-day meeting lines pattern. Now, traditionally seen as a bearish pattern, but the data indicates about half the time it is bullish. So in effect, it might just be a coin toss as to which way this 2-day pattern might influence the market. Looking below, we have the support of the 50% Fibonacci line of the September to December 2023 move at 84.99, and topside we have the resistance of the October 2018 high at 86.67, though there is better overhead at the 50% Fibonacci line in November 2020 to March 22 move up at 87.41, especially on a closing basis. Further down, we have a recent condensed bullish halfway hesitation pattern between approximately the recent 38.2% Fibonacci line at 82 even and the 84 even area, whilst topside is the lesser Fibonacci line at 87.99 and a dark blue highlighted neckline currently at 89.30 or the mid-July to early November 2023 head and shoulders top. Overall, we are now being reduced from 2 to 1 pattern here influencing this market. We had the original early November 2023 to late January 2024 reverse head and shoulders pattern, the bright green neckline that's well below the market, currently at 70.69, which I will downgrade at the end of this week. Then we have the newer mid-December 2023 to date bull channel, highlighted in bright red on my daily chart, currently 81.14 to 90.56. Given the recent patterns, I decided last week to lay out some potentials topside for some of these patterns. Thus, for the bullish halfway hesitation pattern, we have a target X in the 89 even area. And for the November 2023 to January 2024 reverse head and shoulders pattern, we had a primary target in the 84.70 area, which has already been reached, and a secondary hard to reach target X1 in the 87.85 area, which we've just about reached, but I've let stay on my daily chart. Now, one final thought, and it only came to me as I was finishing composing my words today, and that is that perhaps, just perhaps, we're building another congestion band on top of the 82 to 85 area, this time from 85 even up to 87.41. Now, I'm not certain on this one, but it's growing as an idea in my mind, so I'd like to leave it in yours as well. So far today, a gapping open higher since filled in, but still capped further up by the October 2018 high at 86.67. Spot gold. A third bullish white soldier yesterday with the highest close ever. Prices reached up and got lodged within the next area of overhead congestion, the early March high at 21.95. That was inspired by the 100% projected Fibonacci line at 21.93. Further up, the market is capped by the 50% projected Fibonacci line at 22.17. Meanwhile below, we have the broken but still interesting upper trendline extension currently at 21.61, highlighted in dark blue on my daily chart, and that's of the mid-August to mid-December 2023 ascending wedge pattern. Further down, we have the 61.8% projected Fibonacci line at 21.53, then the 50% projected Fibonacci line at 21.41, as well as the November 2023 high at 21.35. Now, I recently put forward the idea that the move higher over late February to March period is part of a very large bullish halfway hesitation. So if we took the action since about December last year to February this year as the actual halfway hesitation, then we'd have the first leg up from October to early December 2023, and the action this March becoming the second up leg. This could give a potential target X overhead up right at the top of my daily chart in the 22.65 area. Very high up, but something to consider. It's also worth considering closer in if the action since March this month is now becoming another halfway hesitation or a topping action. At the moment, it's increasingly looking like a possible fresh bullish halfway hesitation right now. So far today, well, a dip below the overhead congestion, but then a recovery and test over it. But moving higher is not that easy, and prices have sort of become lodged within the congestion once again.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.